if let's say we are not responsible for anything that really for any loss or damages arising from use of any reliance in whole or in any part of the information. Okay, so today, right, I want to share with you what's the current market sentiments for this area called District 9, okay, River Valley. And I think that the first thing that stands out, right, is that our CEO actually said in 2024 November, okay, that 2025, right, will be a boom year for real estate, private housing, okay. And I think that being in real estate, we are able to have a very good foothold and sort of like have a very good vision on how the year is performing, okay. Now halfway through 2025, are we still in a boom year? Because there's many things that are happening all around. Many wars that is going on. We have Trump coming in election. He does not like his own Powell, okay, which is the finance minister, and then he's creating a lot of taxation amongst all the world. And then we also have within Singapore our own election, okay, where Mr. Lawrence Wong became our Prime Minister, and then of course we have our draft master plan that came up in 2025, followed by this year we are also celebrating SG60. Lastly, as well, I think recently the government actually came up with a new SSD rate, okay, for residential properties. So with all this in play, how do we see the market? I think in today's session, right, I would like to share with you all how do we actually see the market. So let's take a look at new home sales first. In the first half 2025, new home sales actually went up by 2.48 times, or about 2.5 times. So we actually compared first half 2024 versus first half 2025, and we noticed that the amount of new homes sold was more than 2.5 times. And the second thing that we noticed was this: increasing large numbers of buyers. They are actually looking at sub-sale. So what it means basically, right, is that they buy at launch, okay, and subsequently after 3 years, but right now you have 4 years, okay, without a new SSD rate. But after 3 years, they start to actually sell, okay, their properties, in which, in average, they actually made a profit of 21%. Okay, what does this mean to you? Basically, right, it's higher than historic level. Okay, a normal level is between 8 to 18%. You see my graph over here, from 2016 to 2022. Okay, so these have jumped to 21%, and sub-sale transactions, right, have grown to about 1,200 units per annum. Okay, which is about 7% of the total transactions, right, that happen within the year. Okay, that's 3 times the level. Okay, so I think that there is also a need that the government curbs these sub-sale transactions to prevent people from bringing up the prices too high. So this was announced, okay, on the 3rd of July. Okay, holding period increased from 3 to 4 years, and your SSD rate increased 4 percentage point to between the range between 4 to 16%. Okay, I think that basically, when people actually buy new launch, it will take up to 3 years to actually complete. So I think the government is trying to extend this timeline to prevent all this sub-sale from happening. Now next, so why is this higher SSD rate coming in? I'm sure, right, a lot of consumers out there, they are also concerned. Why does the government have to actually do this? So I think first thing, right, you need to know is that upholding cooling measures are tweaked, okay, to ensure that the market, right, is stable as well as sustainable. Okay, and this is also aimed to stabilize any spikes, okay, by short-term investors as well as speculators. So they are not looking to crack down on the market. Okay, and we did a poll and we realized that most home buyers are genuinely homeowners, okay, which they are just purchasing for own stay. So residential home ownership remained pretty high, above 9%, okay, in 2024. And we also did our own studies. Okay, most homeowners actually hold their properties for the longer term. So you can see that a very small percentage within the first or the 3rd year actually sold their properties. So in total less than 20%. However, when we take a look at the 4th year as well as the 5th year, okay, entirely, okay, most of them sold within these 2 years, which adds up to be about 83%. So you have to see that investors right now have shifted towards a mid to a long-term kind of holding strategy due to, of course, maybe the increase of rental rates, which increases their capital appreciation. Okay, and of course during this period, while holding on to a tenant, okay, they are also waiting for the price to increase before they make a bigger profit. So we also did a study. Okay, sellers who held their properties for more than 5 years, they saw the highest profitability. Okay, so we take a look at more than 3 years but up to 4 years. Okay, you can see that for the same property, they actually earn about 270,000. If they would hold between 4 to 5 years, they would have earned about 318,000. But over the range of 5 years, the average was 459,000. So that's close to $500,000. And we notice also that of recent launches after the 4th of July, okay, that's where the cooling measures have been announced. There were a lot of crowd, okay, that were around the whole of Singapore, and these were all the photos of different show flats that were around the whole of Singapore. And for the past 4 launches after the 4th of July, okay, we actually averaged, okay, in terms of pricing wise, the average of about 2,700, okay, 980 units were sold, okay, after the 4th of July. So the 4 projects were Linden Woods, okay, which is an RCR project, Upper House, which is a CCR project, which is just recent only, the Robertson Opus, which happened just 2 weeks ago, and then of course finally Auto Place, okay, which is OCR EC. So why is there such an underlying strong demand? I mean, all these properties are all from different areas, different sectors, and we even have an EC launch that also happened. And it seems like everywhere throughout the whole of Singapore, different kinds of properties, there are still a very, very strong wave of buyers that are coming into this market. So of course, I want to allow you to know that there are 3 key drivers of the Singapore private property market. So the first key driver will be strong economics and fundamentals, as well as our good government. So if you notice, in the past 10 years, okay, the average monthly employed household income actually increased quite substantially. Okay, so from 2015 from 11,500 to 2024 14,500. And having a stable government, we want to create a business-friendly environment. So this is to actually attract foreign direct investments. And when foreign direct investment comes into Singapore, that's where we have more funds, okay, to work around in the financial market. So you notice that in the 3 crises that we are talking about right now, in 2007 to 2009, the global financial crisis, foreign direct investments went up, okay, followed by COVID-19 in 2020. All the way to now, okay, we have the Russian and Ukraine war from 20 and 22 onwards. Okay, our FDIs have been increasing very, very steadily. And this is from our Prime Minister Lawrence Wong, during Budget 2025. So he mentioned that he wants to create more opportunities and more better jobs for all Singaporeans. Okay, so the only way that they can create more opportunities and better jobs is to actually attract all these foreign direct investments to come into Singapore, for them to set up family offices, and for them to actually bring their business into Singapore, so that we have a higher quality kind of job, and our Singaporean will be actually paid more. And we also notice that for the economy of Singapore, okay, we are a growing economy. And what does this means to you? Okay, basically, what it means to you basically is that every year, okay, our GDP is in the positive growth. Okay, of course, we take away COVID that year. So during 2020, we shrunk. Okay, our economy shrunk by 3.8%, followed by a very, very strong recovery of 9.8%. Otherwise, you will be seeing that year on year, we are averaging between 3 to 4%. So our private property is supported, okay, by economic and wage growth. Come to think about it this way, people's pay has to increase in order for them to buy a bigger house. So if their pay doesn't increase, it is stagnant. And if it is stagnant, the only way that they can actually buy a bigger house is through using their own savings, or by using parents' money, or even other source of funds. but I think the main source of funds over here, right, is through their wage. So when their wage actually grows, okay, property prices also will be growing. So there is also one factor that will also affect cooling measures into coming in, which is this price growth, okay, their wage growth. So whenever they see that the affordability of private property becomes too high and the wage is still too low, so there is this difference. The government is always monitoring this difference. From there, then they will decide whether should they bring down the property market to cool it a bit so that people can actually start buying the real estate again to make it more affordable, or should they allow prices to actually go up? Okay, so you can see that in terms of the private property price index, our GDP as well as real wages, they actually move in a certain ratio. Now, although we mentioned that the worst is already over, okay. So for the first half of 2025, there were a lot of uncertainties. There was an AI, there was fear of AI being collapsed. Okay, people in the US, they are spending billions of dollars coming up with ChatGPT, while suddenly China, just at the speed of a moment, just came up with their own DeepSeek at a much lower cost. So this actually threatened the entire world, because they are afraid that China could actually create even more powerful kind of AI, and that will probably overpower US. Okay, of course there was fiscal tightening in the US as well and across Europe. Okay, so whenever there's fiscal tightening, okay, there is a fear of inflation. The inflation risk actually runs up higher, and then suddenly there was tariff shocks from the US. And this tariff level, okay, by what the CIO of Temasek said, he probably won't go back to the peak level seen during the earlier rollout. That was the period that I can remind you that Trump threatened to actually tariff China about 140%. Okay, so back on the AI capex, now the momentum is back and people are very confident, with estimates of spending now trending upwards. So with Nvidia coming up, and they are even allowed to actually sell their chips back to China, I think that this stabilizes everything. People are more confident of the market right now, and they are also sure that this fiscal tightening, right, will not happen or roll out in the near future. And of course, during these periods of uncertainty, okay, what our government did, right, was to actually mitigate this impact. So I remember the first thing that they did, right, was to fly all across the world to actually negotiate with other countries. At the same time, okay, they actually start up a new task force, okay, comprising of economic agencies, our SBF, our Singapore Business Federation, as well as NTUC. So their main aim, right, was to help businesses and workers, right, to address these certain uncertainties. So they are all ready to actually do more and to move if it is necessary. So this was when our DPM, Gan Kim Yong, unveiled the grant for tariff hits. Okay, so they are prepared to give you a grant of up to 100,000 for businesses that are affected by the tariff. So similar SMEs, okay, will also get a higher proportion of co-funding compared to larger companies, because they also notice that larger companies, they are able to survive better, and the smaller companies, okay, might not be able to survive if they will need to have this kind of tariff. So that's the reason why, okay, they are able to actually get a higher co-funding rate. And then of course they also came up with a business adaptation grant to help businesses to review their existing overseas footprint over the period of the next 2 years. So I think that this averts a lot of risk for businesses, right, that are exposed overseas. So then comes our second key driver, which is the rising demand for housing. Okay, so I'm sure you know that Singapore being a very small island, housing is a need, a necessity, and everybody needs to actually have a roof over their head. So we are actually getting more and more Singapore citizenships as well as PRs. So you can see that this number has been steadily increasing ever since there was a tightening of immigration framework in 2009. But since onwards, okay, every year, right, there has been a steady increase, other than the year of COVID, which saw a huge decrease. Okay. So with such a rising population, okay, it does means that we do need more houses. Okay, so in 2024, our population stands at 6.04 million. And our population white paper actually states that by 2030 we are going to hit 6.5 million. And as of now, okay, we only have 3.64 million of Singapore citizens, okay, about 500,000 of PRs, and close to 2 million of non-residents. So I'm sure that these 2 million non-residents could consist of buyers as well as rentals, okay, so which in turn also spurs the rental market. So our population growth will drive housing demand as well as prices, okay. So as our population increases, okay, your housing demand and prices will also follow suit. And we take a look at the countries that are attracting the most millionaires, okay, and looking at the green color circle, UAE, they attracted 6,700 millionaires, and we are on par, okay, with Canada and the US with 3,500. On the other hindsight, okay, China and UK, they are losing quite a lot of millionaires. So China, 15,200, okay, UK close to 10k, and of course the rest of it consists of the rest of the world, okay. But one of the main reasons, right, why these high net worth families choose to relocate, I'm sure that schooling and education is the top priority, and then of course next thing, right, will be their safety, okay. And of course Singapore has a better and higher healthcare system as well as a standard of living, which is why you see that everywhere when you see tourists, they say that our country is very clean, okay. On top of it, we have low taxes and it's a good place to retire. So all these things, right, actually helps, okay, for all these millionaires to actually make a decision, right, to actually plant their roots over in Singapore. Now, for the past 6 months, we have also seen twin view, okay, so we have seen T-bill, okay, cut off. So they actually went down by 2.05%. So when interest rate increased, okay, we noticed, right, that T-bill interest rate actually went up close to 4%. Okay, since the 1st of July, okay, T-bill's rate has came down half, okay, to about 2.05%. So this means, right, a low borrowing cost environment, and this is something that the buyers really like, because when buyers are sourcing for houses, they are also looking at interest rate and installments. So when interest rate comes down, it means that their installment becomes more affordable for them, and that's the reason why they are looking into this. And of course, for new launches, when you are actually buying on a payment scheme, your installment gets even cheaper, because in the next few years to come, I think the interest rate can only go down, it can't go up already. So lower interest rate will boost demand, okay, and by boosting demand, when there are more buyers that are coming into the market, okay, more transactions will occur, and of course, when more transactions occur, okay, prices will definitely have to increase, okay. So we take a look at the chart, interest rate versus transactions, and we notice that the moment interest rate comes up, okay, then you start to see that your transaction comes down, okay, and this is a very, very clear graph that you can see as well. And over here on the left, the moment interest rate comes up, okay, we will start to see sort of like a stagnant market. After that, when it came down, the market started to boom. Okay, so we are in an environment right now, right, in the first quarter of 2025, that interest rate just came down. Okay, so when it stabilizes, right, I'm sure that more transactions will occur and more buyers will start to come up in the market. So this is our third key driver, and we are talking about proactive government regulating our home supply. Okay, so during our URA draft master plan, okay, normally this master plan, right, is to guide us, okay, for the next 10 to 15 years. And previously we actually announced a few locations such as Bukit Timah Turf City, okay, Keppel Golf Course, and other new housing estates that are being planned across the country. But right now, okay, just recently, the government actually announced, okay, several other places, including Sembawang Shipyard, our Paya Lebar Air Base in Defu, okay, the Greater One North, okay, we have a plot of land in Patterson, as well as the rejuvenation of Newton, okay. So these are plans that the government has just rolled out just recently only. So past this URA master plan, okay, they actually focus on their decentralization strategy, which is to actually develop regional centers around the whole of Singapore, mainly the north, east, and west side of Singapore. Okay, so this actually takes out crowds, okay, back into these regional centers to free up space within the central area, okay. So more than 80,000 public and private homes will be planned, okay, in more than 10 areas over the next 10 to 15 years. And don't forget, we still have our Tengah estate, which is currently a work in progress, okay. So right here, okay, in within city center, we have Patterson and Newton, okay. And then of course, towards the left, we have One North as well as Paya Air Base. And then we have an entirely big area called the former Singapore Race Course area, okay. And then followed by Sembawang Shipyard, which is a pretty big area as well. So what is the effect of decentralization here? So the moment, right, we actually started to announce decentralization, we also noticed, right, that the prices of CCR start coming down, hitting really very close to the RCR price. So you can see that, you know, in terms of pricing wise, okay, RCR price towards CCR price, we came down to a difference of only $28. So what it means to you basically is this: if you were to buy a 1,000 square feet property right now in CCR, the difference in RCR is only 28,000, which could even be cheaper than your Rolex. So I mean, this makes it a no-brainer for a lot of buyers out there, because comparing CCR and RCR, for the price of one Rolex, of course they would prefer to stay in a higher tier area, okay? And of course, developers' benchmark, right, for land is still very strong. Okay, so you can see that the new benchmark for land prices in the first half of 2025 per site, okay, we see confidence over there that there was an average of 4.5 bidders per site, okay, of which, right, the highest bidded site was Bayshore Road, okay, which saw 8 bidders, okay, at a land rate of 138 per square feet, followed by Lakeside Drive, okay, which has 6 bidders at 1132 per square feet per plot ratio, and lastly, of course, after Chuan Park, we have Chuan Grove, okay, which had 7 bidders, okay, at 1376 per square feet per plot ratio. So all these prices actually translate, right, that River Green, right, actually had, okay, a lower land rate compared to all these 3 places, which is a CCR project. And of course, recent land bids, right, and their corresponding land prices, you notice also, right, that there is a good relationship between them. And you will see that, you know, River Valley Green, Pasir B, and Dunyan Road, they are pretty close, okay. Media Circle is the lowest, and followed by, okay, in our OCR, we have a few more within Tengah, Lentor, Dairy Farm, Lakeside, Chuan Grove, as well as Bayshore Road. So all these prices for new homes in the first half of 2025 have already caught up, but CCR prices, right, has not caught up yet, okay. And of course, I'm sure that this catching up, right, is going to happen sooner or later, which means that, you know, very soon you will notice, right, that the CCR convergence, right, will actually go back up again. So in recent years as well, the focus has been shifted back to our city center. Okay, so URA actually announced our business improvement for the 3 keys, which is Clarke Quay, Boat Quay, and Wilson Quay. And then there was an enhancement initiative. Okay, they spent 62 million to rejuvenate Clarke Quay. And then we have Marina South that have already guidelines finalized by URA. So it's going to be an area whereby you can live, work, and play with offices and residential. Okay. Then we have Turf City and Pearl Hill that URA announced for new development. Of course, recently we had MBS Tower 4, which will have another hotel as well as entertainment center. Okay. And then next, rejuvenation plans for Orchard Road as well as Marina Bay. And then followed by the Robertson Opus, okay, redevelopment, okay. And then of course in February there was extension of the CBD incentive scheme, okay, and strategic incentive scheme. And lastly, the draft master plan in 2025 highlights new homes in Patterson as well as Newton. So all these new houses in Patterson and Newton is to provide community life experiences as well as lifestyle. So it's going to be like an urban village, okay, that is planned next to Newton MRT. With 5,000 new homes, okay, there will be 3 clusters at Newton Circus, Scotts Road, as well as Marks Hill. And then Patterson neighbourhood will be transformed into a bustling mixed-use hub with 1,000 new private homes, offices, shops, as well as public spaces above Orchard MRT. So with all this in play, right, we also notice that this might really affect the price of River Green in the future. Because Orchard Road, right, is just one MRT stop away from River Green. Okay, in fact, from our showflat you probably can see this plot of land over there already. And then all these business improvement district, okay, are aimed to increase vibrancy through events, which is to bring in crowds, okay, community engagement as well as public spaces. So they are there to actually preserve the Singapore River's unique charm, okay, and of course to create more public spaces to promote engagement as well as to increase livability. So with all this bustle within this area, okay, it is likely also that potential investors for River Green are able to actually find tenants within this area, of course the Three Keys as well as Marina Bay. Well, I want to actually share with you more, but time is running out, so I'll get my colleague to share more with you on her take on River Green. So Joelle, back to you.
Thank you, W.I.N. Okay, let me share my slides. Okay, so today this is a bonus insight that we have decided to add on this on-call section. So if you can see my slide now, the W.I.N win, can you please type win in the chat room? Okay, thank you so much. Okay, so what does WIN represent? So W means, is it worth the entry? So we will actually explore, and jump into like whether is it really worth entering into River Green today. I, can it be income positive? And N, is the next exit clear? So let's look at the W first. Of course, first of all, I think just now W.I.N also mentioned, and you all have already heard this many times, right? Like CCR at RCR or OCR pricing. So I just want to reiterate it further, okay, by just flashing back this chart. So you can actually be reminded that we are really very close. So the yellow line is the CCR and the red line is the RCR. You can see our gap is really very close, okay? And so when it's actually your opportunity, right, you see that when the gap actually widens, you get a better price gain in terms of the CCR versus your RCR. And let's look at what has already transacted, some of the notable launches. Chuan Park is one of them that actually launched last year. 76% sold in day one at average 2579 PSF. But let's go into the quantum. If you look at the 2-bedroom, the prices that has sold is actually range from 1.6 million to 2.15 million. And the 3-bedroom is at 2.2 to 2.77 million. River Green prices, 2-bedroom start from 1.5 million, 2-bedroom premium from 1.72 and 3-bedroom from 2.25 million. Then we look at Emerald of Katong. Okay, so Emerald of Katong is at rest of Central Region. And their 1-bedroom was sold, between 1.24 to 1.445 million. 2-bedroom, 1.59 to 1.97. And the 3-bedroom, 2.17 to 2.85. Whereas our River Green prices, 1-bedroom start from 1.2, 2-bedroom 1.5, 2-bedroom premium 1.72, and 3-bedroom from 2.25. So you can see our prices are really attractive, is really at same as your RCR pricing. And the most recent Linden Woods, so their 2-bedroom range from 1.46 to 1.87, and the 3-bedroom premium is 2.4 to 2.77 million. Right, so for the 2-bedroom for River Green, you can see we start from 1.5. For the 2-bedroom premium, start from 1.72. It's still actually within the range of what Linden Wood has sold at. And our 3-bedroom start from 2.25, which is lower than your Linden Woods. So now let's look at the resale pricing. We are not just a same or some of it is lower than your new launches pricing. We are also lower than the resale pricing that is our closest competitor, which is your Irwell Hill. So that I think when people are looking into this area, looking at River Green, Well is definitely one of the development that we'll look at because it's the newest TOP development. Okay, so if you look at your 1-bedroom for Well Hill, the pricing actually has transacted from 1.26. There are 1.48 for the bigger ones. It's actually 1.6, 1.64, and 1.68. For the 2-bedroom, you have 2.2, you have 2 million, 1.8, 1.9, 1.69. Okay, that is the lowest transacted so far. Okay, and for your 3-bedroom, is transacted at 2.64. Okay, so these are the transacted units after its TOP, right? So some of them is like sub-sale, even before TOP they already kind of transacted at this kind of pricing. So if you compare the pricing for the 1-bedroom, we are starting from 1.2. So potentially you can get a unit that is cheaper than what has been transacted in a Well. Alright, and the 2-bedroom, the 2-bed 1-bath, which is starting from 1.5, okay, and your 2-bedroom premium from 1.72, they are all lower than what has transacted. Okay, so this is a very, very strong point, okay, that you can be looking at, very strong safety net that you'll be entering in. Okay, so let's look at the natural upgraded demand over here. Upgrade without uprooting. Okay, so what will be a natural choice for the nearby HDBs? Okay, this location will be a natural choice if the Queenstown residents would like to upgrade. Okay, you have your central area, which is your cantonment area, right? And your Bukit Merah, like your Henderson, your Telok Blangah. Okay, so they are all actually very close vicinity and they are very used to the central location and city living. So River Green is definitely a very familiar location to them. There is no, they don't have to get used to a new environment. Technically, it's a very familiar environment. And just based on this 3 estate itself, there are a total of 190,694 HDB flats, right? You just need a tiny ripple to create a wave at River Green because we only need 0.3% of these HDB upgraders to come to buy from us and we are fully sold. Right, so whether is it now or whether is it in future your resale demand, this is a very, very strong demand by just looking at 3 estates. We have not even touched on other estates in Singapore. So you can just see how strong your potential is for your future demand, right? So, and why I say that these 3 estate itself, they are very strong HDB upgraders due to the potential profit that they can get from their sale of their HDB, right? So if we look at the central area for 2025 itself this year, the average price already hit 1.395 million, okay, for the HDB in central area. And if you look at Queenstown in 2025 this year, average price has achieved 972,995. And whereas for Bukit Merah, average price has achieved 939,919. Okay, and actually they have even achieved prices as high as 1.658 million. Okay, that is really very strong purchasing power that you can look forward, okay, to sell to these HDB upgraders in future. So let's look at a compact home demand in Singapore right now. This is actually a new trend that has evolved. Okay, you realize that Singapore's household actually is shrinking. If you look at the average household size, that means person per household in 1995 is actually 4 people in one household, right? And 2025 it become 3.6, 2015 become 3.4, and as of last year it became 3.09. So if this trend carry forward, right, by 2030, the projection we should be looking at 2.9 to 3 people per household. And why is it that our households are shrinking? Because we see a rise of 1 to 2 people, in one household, right? Due to aging population, more seniors are actually living alone. Couples are delaying, marriage, or they are delaying parenthood, or even skip parenthood totally. And there were more dual income, no kids household. Okay, and if you look at the average condo size, right, you will realize that actually sizes are very relative. So it depends on what you compare it with. But to make it a good comparison, let's look at how much space you can enjoy based on per person. Okay, in 1995, the average condo size is 1272, right? It was really big, but you have average 4 people in a household. So an average space per household member is 318. And then in 2005, the size went up by a bit. The average new condo size went up by a bit at 1286. And the average household size is actually 3.6, which adds up to which become 357, okay, average space per household member. And now you look forward to last year, like 2024, our average condo size is 929, okay, and our average household size is 3.09, and it gives you an average space of 301. So if you are comparing like 10 years ago, okay, now you are actually enjoying more space per person today, even though your average condo size has become like, smaller, much smaller than before. And why this trend will continue, why compact homes will continue to stay in demand. Okay, if you look at this whole data, okay, of resident household by household size and floor area, you'll see that we actually have 40% of the whole resident household has only 1 or 2 people in the household. Up to 40%. It's like that is really a lot. Okay, and if you look at the size, we break down into 60 square meter and 60 to 80 square meter. This is the number that we are looking at. So actually, the demand for compact homes have grown steadily from 2020 to 2024. Okay, so you can see it has grown, right? For this one, based on 1 to 2% from 39%, slowly, then now become 40%. And 26.3% of households are already staying in compact homes. So this 60 square meter all the way, that means up to 80 square meter, the total base is actually 26.3%. And which also means that 382,000 households can accept your smaller homes, which is less than 80 square meter. So now let's move on to I. Okay, we are looking at income positive. Okay, income positive, definitely we will relate to rental, right? So rental transactions has been very strong, and if you compare it within 500 meter radius of the District 9 MRT, we are a clear winner, okay? So the green bar is Great World MRT, the brown is Newton, yellow is Orchard, and the red one is Somerset. So you can see from 2020 all the way to 2025, Great World MRT is a clear winner, okay, in terms of the strongest demand in rental. Now let's dive into the 1-bedroom analysis, okay? So 1-bedroom, their potential rental we can look at, okay? We take reference from Irwell Hill Residences and Riviera. Okay, in this area, in River Valley itself, you don't see a lot of 1-bedroom supply. Okay, so the closest and a newer development that we can compare to will be your Irwell and Riviera. Okay, so Irwell TOP this year and Riviera is 2023. So if you look at Irwell first, the range for 1-bedroom is 400 to 600 square feet, and the prices transacted is 4.3 all the way to 5.1. Whereas for Riviera, it's 500 to 600 square feet. They have managed to rent out at between 5,150 to 6,002. And do bear in mind, OL Hill and Riviera, they are both under the pre-harmonized harmonization guideline. Okay, so aircon latch and will be actually included into the size. Okay, so let's do a case study assumption. Okay, purchasing a 1-bedroom in River Green at 1.3 million. So the assumption here is, a younger buyer who can still take a 30 years loan tenor and have been working for a few years, accumulated 100,000 CPF in their ordinary account. So interest rate that we use for the building construction period will be 2.2%, and when you reach TOP, the interest rate will become 1.8%. Okay, so if we are looking at a purchase price of 1.3 million, a 75% loan will be 975,000. And in order to take a 75% loan, the income required is $8,500 here. Okay, so assuming that this buyer has this income and actually can afford to take the 75% loan. And a 25% down payment of $325,000 with the stamp duty of $36,600, which adds up to an initial outlay of $361,600. But let's break it into CPF and the cash component. So CPF 100,000, which left the cash component at 261,600. Then let's look at the cash flow portion here. If you have an 8,500 income, it will contribute, $1,680 to your ordinary account every month, which you can use this to pay for your mortgage. Okay, so at the end of the CSC, when the CSC's period have achieved, right, your final mortgage installment will be at 3,508. And you can use the 1,680 to pay part of your mortgage, and it left 1,828, which has to be in cash. Okay, so just now remember we said that the potential rental here is $4,500 to $5,000 for the one bedroom, but let's be conservative a bit. We just take the lower end at $4,500. Okay, so if you rent out at $4,500 and you less the maintenance fee at $350, yes, our maintenance fee is very, very attractive. It's only $350. All right, and so you less off the maintenance fee and you less off the mortgage top up in cash that you need to do, which is 1,828. Your positive cash flow every month is 2,322. Okay, so I hope everybody is clear up to this point of time. So if you are clear, can you please type a 8 in the chat? I hope my speed is okay. Thank you. Okay, let's move on. And so the initial cash outlay is 261,200. Okay, so now we are looking at the cash component. Okay, we want to look at the cash flow. We want to look at how much, how hard our cash can work for us. Okay, so if you look at the initial cash outlay is 261,600. Your annual cash flow will be 27,864, right? Because every month you take back 2,322, so in a year you will accumulate 27,864 cash, positive cash. And this term, I will be introducing this term, okay, called return on cash. Okay, so return on cash probably is not so familiar to a lot of people. We are very familiar with return on equity, okay, but return on cash is something that we want to do an apple-to-apple comparison in terms of how hard, your cash can work for you. Okay, so in this case, the return on cash is a 10.7 return, okay, on the 261,600 that you have invested in this one bedroom right here. Okay, so if let's say you are someone who has this $261,600 cash lying somewhere, and you want to do something about it. Correct. We always need to invest it somewhere or put it somewhere. We can't possibly just leave it at home, right? So what can we actually do with this money? Definitely, we can buy one bedroom in River Green. Okay, so this is your one bedroom return on cash returns that we are looking at 27864, a yearly return. But if you can choose, right, to just be very, very, very safe. And in fact, I think that is the most dangerous thing to do, to just leave it in your bank, okay, and earn probably less than 1% savings, okay, interest, which is 2,616. And you can choose to put in fixed D or 2%, or you choose to actually throw it into your CPF and put it in your SA, which gives you a 4% return. Or probably you want to be a little bit more aggressive and you want to put in a balanced fund at 5% growth or a growth fund at 7%. So all this we are talking about using that 261,600 cash, okay, to invest in this cash. So if you look at this whole comparison, which one make your money work the hardest? Okay, so River Green, I don't have to say, right? It's very obvious. Up to 10 times more yearly return on your cash. And we are just talking about rental cash flow. Okay, we haven't even looked into the capital appreciation yet. All right. Then now we want to look at the capital appreciation on top of your cash flow, on top of your rental, right? So achievable profits for your one bedroom that has achieved before, in also like similar property like W.I.N, okay? They are like full condo facility, decent size development, they are near MRT, they are near to the city, or rather they are in the city, like or city fringe areas. You have a Sterling residences and your dual residences are two development that actually I pick up to do a comparison, and you can see that the average profit that they have made over across, you have a lower, you have a higher point, so the average is about 250,000. So, but probably to some of you, you have no inclination, you have no like estimation of like 250,000, like is it a lot? Is 250,000 considered a lot? Probably this term you can relate better. Okay, so what is 250,000? This 250,000 profit, right, is equivalent, is actually up to 103% return on equity. So if you look at this dual residence 300,000 profit that they make, and based on the down payment that they make plus the stamp duty, technically they are getting up to 103% return on equity. Okay, so I hope when you look at this figure, you can relate better. Okay. And then let's look at, okay, I get you. Rental is, I can positive income, and my return on equity is also fantastic. Okay, but one bedroom, I'm not sure if I want to buy one bedroom, because probably I want to buy something bigger. Okay, I want to buy, actually, I prefer a 2-bedroom or even a 3-bedroom, right? However, now is not the right time. I think I better wait, wait when I have accumulated enough funds, so then I buy a bigger unit. Okay, so let's look at, does it make sense? How can this small start lead you to a bigger win? Okay, so assuming you really buy in a 1-bedroom at 1.3 million here, and we just take a very conservative average growth at 3% for 6 years. Okay, why I say 6 years? Because you are going to hold about 3.5 years for it to build, right? Then our TOP is estimated to be Q1 2029, and then so if you're going, then after that you rent out probably for another 2.5 years, total to 6 years, right? Because I will recommend you to actually rent out a bit, wait out a bit. Do not rush in to sell at the TOP, because you may be fighting with other people who want to let go immediately during the TOP. So, and capitalize on the high rental returns for your 1-bedroom. Alright, so we give ourselves a timeline at 6 years. So imagine you were to sell at a 3% growth for 6 years, you will be selling at 1552268. By the time your outstanding loan should be 887503, and your sales proceed that you can get back from this sale after less of your outstanding loan will be 664,000. And remember, you still have positive cash flow of $2,200 every month, and we've added in, right, you would have already pocket in 69,600, rental cash. Okay, so all in all, your end position, your net position will be 734,000. So when you have this 734,000 at the end of 6 years, what can you do with it? Can you use this one to down pay for a bigger property? Okay, what price can you be paying for? Okay, this amount is just nice to down pay a 2.55 million property. Okay, assuming that you are getting a 75% loan. Okay, so this amount itself, not touching any of your savings that you managed to save up for the past 6 years. Okay, just purely by making this move, investing in a 1-bedroom at River Green, you are geared to down pay a 2.55 million property in 6 years down the road. And you tell me that, hey, I want to save lah. Okay, never mind, I save. Okay, I save. I don't want to like go and buy this property right now. Can you really save your way to 372,000? Why do I say 372,000? Okay, because your end position is 734,425, and your own capital that you pay upfront, okay, at the down payment is 361,600. So if you net it off, technically you are using 361,600 to make 372,835. So in order to have this amount, okay, to save this amount in 6 years, it would mean that every month you have to save $5,178 diligently without fail every month for 6 years. Then you can save up your 372,835. But remember what is the income, okay, that this person has, okay, is $8,500 every month. So do you think that it's realistic to save 5,178 every month with an $8,500 monthly income? Okay, so of course, 2-bedroom, we look at the potential rental. Okay, 1 bath is 5,000 to 5,005, and 2 bath is 5,005 to 6,005. I'm not going to go through the numbers, okay, it's actually the same concept, but I'm going to share with you the end result. So the positive cash flow, if you're going to buy a 2-bedroom at 1.65 million, okay, your positive cash flow is 1,878. Okay, so this one, I choose, I instead of 100K CPF, actually I increased a little bit to 150,000 CPF because I assume that for someone who actually can afford to buy a 1.65 million property, they must have worked for more years, right? And hence your CPF OA would have accumulated more, okay? So this gives you a return on cash of 7.2%. And what about a 2-bedroom premium? Okay, so 2-bedroom premium at 1.9 million. Your potential rental, we also take the lower end, which is 5,005. Okay, lesser maintenance fee of $420, and your mortgage top up, your positive cash flow is 1,634. And that brings you to a 6.1 return on cash. 3-bedroom rental potential 7,008 to 8,008. Okay, and if we base on the 7,008 potential rental, okay, your positive cash flow is 2,585 every month, and it brings you to a 8% return on cash. Okay, so I'm sure that now it's very clear that your income is definitely positive, you know, by investing in this whichever bedroom type that you have aimed for, you know, in River Green. So do not worry about that, okay? But I think most importantly is a lot of people is worried about exit. It's actually very easy to enter, but is it easy to exit? That is the key questions that everybody have, you know, in mind. Okay, so let's look at the demand over here. Your strong demand will equal, strong demand actually equals to high profit. You need to have demand, then your price will go up, then you can sell at a good profit, right? Okay, so remember this ERA 2024 Dream Home Survey, okay, that says that, you know, the consumers have 9 considerations when choosing their dream home. Okay, so River Green actually tick all the boxes, okay. Affordability, we already seen like how affordable it is. We are entering, you know, at past new launches prices and even lower than the resale prices, okay. Proximity to public transport, I don't have to say further, you know how convenient it is. We have our, it's a very good environment. We are right next to Park Connector, okay, amenities, ample, okay. Investment potential, proximity to work. Proximity to school, we are within 1 kilometer to 2 primary school, which is Alexandra and River Valley Primary School. Okay, and facilities, we have the full condo facilities. We even have a tennis court for you. Okay, so size of property, I mean size is really relative. So frankly speaking, a lot of times, if you want affordability, you cannot have a big size. If you want a big size, then you cannot have affordability, right? But here at River Green, they really can design the layout so well, you know, that they give you a very good balance, okay, of affordability and the size. Okay, so River Green tick all the boxes, which also means that your demand here will be fantastic. Okay, so let's talk about the convenience, you know, 100% sheltered to Great Wall MRT and more. We are really 100% sheltered. You know, you are very close to the mall and MRT, but is not too close for comfort, because you don't get the noise, you don't get the crowd as compared to a real integrated development. Thomson East Coast Line is a super fantastic line. Okay, it's one of my favorite, and Great World MRT is really the best. Okay, along this whole line. Why so? Okay, because Thomson East Coast Line connects to all other MRT lines in Singapore, and Great World MRT falls right in between, in the middle. So whether do you want to go up north or you want to go downtown, all the way to the east, you are right in the middle. You can choose wherever you want to go, and you can connect to red line, blue line, yellow line, purple line, any of the line that you want to connect to. And the best part is that, it's fully underground, so you can enjoy the close proximity, but you don't get the noise from the MRT track. Of course, the mall, Great World Mall, is a day-to-day mall. Okay, it's a neighborhood mall. It's not like your ION, it's not like your Paragon, only sell all the branded, atas stuff, right? So here really has everything that you need. You have Best Dengi, you have CS Fresh, you have a food court, you have cinema, even like you want Japanese supermarket, we have media, we have like True Fitness. You basically have everything that you need to do your grocery, to just do a quick makan, or you want to have a more fine dining, restaurant, you can find it at Great World. Optimize layout, maximize value. Our layout is so good that I really cannot find any fault to it. Okay, so let's do a comparison. How good is our layout? This is River Green 2-bedroom 603 square feet. If you have seen our show unit, this is actually the one of the show unit that is featured in our sales gallery. Okay, so 603 square feet. Okay, the kitchen is a very proper defined kitchen tucked at one side. Okay, you have a very proper dining, okay, that can sit comfortably, 4-seater, no problem, right? I would think the balcony is just the right size, not too big and not too small. Okay, so now we compare to Riviere, also 2-bedroom, that is 818 square feet. So Riviere itself, remember we mentioned that this is a pre-harmonized project. So pre-harmonized project, which means your aircon latch here will be included in your 818 square feet. And look at the balcony. Okay, the balcony is actually a bit big, in my opinion. And you have this like open kitchen over here, and you have this like walkway, okay, a long walkway that eats into some of your square foot. Okay, so you are paying all this like extra, okay, that you don't really need it, okay, in my opinion. So this buyer bought in 2020 at 2.07 million, and they sold this year at 2.33 million. Okay, so if you look at River Green 603 square feet, you can easily get this like at 1.75 million, which is way below what even the buyer purchased in 2020. Okay, then you look at multi-modern 764 square feet. Okay, balcony also bigger than what we have, aircon latch included, a long walkway, and they have a smaller, seems to be a bit squeezy, the dining area. And this kitchen is not so popular, okay? This is like a gallery kitchen along the walkway. So a lot of buyers actually don't prefer this kind of kitchen. And you see what is the price? They actually, when the price that they bought, right, they bought at 1.75 million, which we can also get the same price in River Green today. And they sold, last year at 1.97 million. So you can see, because of our efficiency of the layout, you are actually paying lesser, but it doesn't compromise your livability at all. Then even we compare a 3-bedroom at 872 square feet to the multi-modern 3-bedroom 1012 square feet. Okay, so I know here we are talking about like 140 square foot difference. Okay, 100 square feet difference. So 100 square feet difference, where are those like really difference that you do not need it, right? So first of all, balcony, very obvious, okay, is a much bigger balcony. So for people who really like big balcony, then good for you. But I would think that to have a good balance of the price and the space, probably I don't need such a big balcony. Okay, aircon latch included. There's one aircon latch here, and there's another aircon latch over here. Okay, there is this there's this small walkway over here, okay, that will be used up. What else? Okay, and something I'm really impressed with our 872 square feet is we managed to have a home shelter which can double up as a storeroom or even a helper room. Whereas your 1012 at Multimodern doesn't have any like storeroom or helper's room in this layout itself. Okay, they bought at 2.094 million in 2017 and sold at 2.8 million in 2022. Okay, so if let's say you buy a 872 square feet in River Green at 2.54 million, you still have a very big margin, okay, of what it has sold, okay, in the market. So just a quick snapshot of the resale average transacted prices for the one bedroom in this area. 1.3 to 1.6 million is what can get you a one bedroom in the resale market right now in River Valley. Two bedroom 2.2 million to 3 million. Three bedroom 3.1 to 4.8 million, and the four bedroom is 4.9 to 6 million. Okay, because the four bedroom is really big. And so if we look at this whole price matrix, this is our starting price. Okay, if we just look at all the way to the far end now, we just look at the 3,300 per square foot. Assuming even if you enter at 3,300 per square foot, you look at our price versus the resale transaction price, you are still way below what people are buying. Okay, and your 2 bed 2 bath, okay, 1.99 million, is still below what it has transacted. 3 bedroom at close to 2.6 million, also way below what it has transacted in the resale market. And 4 bedroom 980 square feet, right? Okay, I know some of you argued that, hey, I won't say it's a 4 bedroom, I will take it as a 3+ study. Fine, okay, it can be 3+ study, but even so, if you compare this as a 3 bedroom, you look at 3.23 million versus what it has transacted in the resale market for the 3 bedroom, right? It's really a very glaring difference over here. Okay, so what do you think will be the right entry price for River Green? And one of the very clear exit is when the CCR and RCR get normalizes, right? It always does, right? So if we look at the pattern that has happened before in 2015, 2016, all the way to 2020, you see that the CCR RCR gap narrows to 25. When it narrows to 25%, it will rebound and widen to 33% in the next cycle. So it has already done so before. Okay, so right now we are at 2.98% difference. Okay, and so CCR prices actually have been artificially suppressed due to government policies and limited CCR launches. I personally feel that the main reason for this close gap is really due to the limited CCR launches right now. Okay, so imagine if the CCR gap widens to become like before, okay, to a 33% gap, your CCR prices should be at 4082 PSF. And you can see very clearly the CCR new launches over from 2020 to 2024 is very, very little. Okay, it's only 15% of what it has been launched, okay, in the past 5 years. And but this year is your opportunity, okay, because there is a supply spike in the CCR market, and it takes up about 1/3 of the whole new launches that's going to happen in 2025. And this supply spike will definitely reset the whole playing field in your CCR. So remember, every new launch lifts the price floor higher. So enter now before prices catch up to the new norm. And back to what W.I.N has shared with you on the master plan and transformation around us. Okay, so I just want to share that River Green is uniquely positioned in a very strategic location. Okay, we are located in District 9. We are surrounded by transformation, but we are not under any construction within itself. Okay, so we enjoy the peace, quiet, and livability while the nearby zones redevelop. Okay, so we definitely have spillover demand from buyers and tenants that want to avoid the noise and dust from the ongoing works that is being transformed in the surrounding area, okay, surrounding us. So if you look at the rough timeline that we were looking at, right, for the transformation around River Green, Patterson area, the mixed use area, the timeline we are looking at is like 2030 to 2035, right? So River Green is expected to TOP in 2029, right before. So definitely when people who are, part of them who are actually wanted to stay in Patterson, but because of this transformation and construction, they probably will explore somewhere that is nearby. Okay, they will want to move out of this area. And your Pearl Hill ongoing. Okay, so Mount Pleasant, Newton, Marina South area 2025 to 2040. Okay, so probably you also will have spillover demand, okay, from this area to your River Valley side. So limited supply, high demand. Okay, so limited supply is really the key right now. Okay, this is probably familiar to many of you, the old age support ratio that I want to highlight. Okay, by 2030, we are estimated, right, likely to have 2.1 adults supporting one elderly person. Okay, it has dropped from last year at 3.5 ratio. Okay, and is expected to be 2.1 in 2030. So because of this, we need to increase the population in Singapore. Government needs to do that without fail. Okay, by hook or by crook, it has to happen. If not, the whole economy will collapse. Okay, so the magic number that the government wanted to achieve is 6.9 million. As of last year, we have achieved 6.04 million population. So we still have a shortfall of 860,000. And if you look at the whole percentage of the residents and the non-resident, okay, it's actually a 40-60 split. Okay, so the 40% is really taken care of by the PRs, your EP, your SP, and your dependent. Okay, so assuming that Singapore wants to increase 344,000 of the shortfall headcounts by this group of people, okay, who will consume your private property, and a lot of these people, they are familiar with your central location and they will be looking at your CCR or your RCR. Average household size, just now we have mentioned, is 3.09. So if we base on 344,000 over 3.09, we actually need 111,327 homes by 2030. And we look at the private homes completion pipeline, there are actually 57,539 units already in the pipeline that's going to complete, okay, until 2027 or beyond, right? So do we have enough private homes? Let's do some math here. Okay, so if you take what we need and what we have already, there is still a shortfall of 53,788 unit shortfall. So guys, it's very clear, demand more than supply, right? So what is going to happen to our prices? And let's zoom in, okay, to the last part of limited supply within close proximity to Great World MRT, since we are on limited supply. So can you see that, right? Great World MRT condos within 1 kilometer to Great World MRT, we actually have 146 condos right now. But if we zoom further nearer, okay, to Great World, which is 500 meter radius, it reduced to 43 condos. And if you zoom in even nearer, okay, to your Great World MRT within 200 meters, which we definitely will fall within the 200. We are really that close, okay? Currently, your supply is only 3 condos. So since Great World MRT is such a popular area that people want to stay in, and you look at what we have, our supply is only 3 right now. These are your competitors right now, which I don't even think they are your competitors because of your very, very attractive entry price. So I believe by now you should agree with me that River Green really tick all the boxes of the 9 factors, that a consumer will consider when they are choosing their dream home. Okay? So opportunity like this don't stay on the market long. If you wait, you might be buying someone else's profit. Okay, so that's the end of my session today. If you have any question, you can always reach out to your ERA trusted advisor. And let me see. Probably I want to see if we have any question right here, right now. And do not forget that Tuesday, 1 p.m. is our cut-off for the registration for the balloting. Okay, so do not miss this golden opportunity. Okay, so we hope to see you at the booking day. All right. And we have no questions. Thank you, everyone. Have a good evening, and I will see you at River Green Sales Gallery.